Hey everybody, Joe Peluso here again from Complete Payroll. Welcome back to PeopleWork. PeopleWork is, of course, the series that we do where we interview experts on a wide variety of topics under the human capital management, human resources umbrella for the benefit of anybody whose job it is to manage a workforce or take care of people. Very happy to have on today Scott DeLuca, who is a labor law attorney from the Kavinoky Cook law firm. This is the first of a two-part series that we did with Scott. This first part is about the employee retention credit. And then the second part is going to be about the various leaves that kind of popped up in the wake of the COVID-19 pandemic. So very excited to present both of these to you today. These are very sort of murky subjects, to say the least. And I think Scott does an amazing job of sort of breaking it down to sort of digestible and understandable terms. He was very gracious with his time and very knowledgeable, and we're super lucky to have him. So very happy again to present to you the first of two episodes featuring Scott DeLuca from Kavinoky Cook. This first one is on the employee retention credit. Enjoy. All right, Scott DeLuca, do I have you?
You have me. I am right here and glad to be with you.
And you are at the United States Supreme Court.
I am at the Supreme Court today. Yes, I'm a proud member of the bar of the Supreme Court.
That's right.
I was admitted in 2017 live in person at the Supreme Court.
That's right.
We had direct eye contact with the Chief Justice. He looked right at me when my name was called and I stood up.
Fantastic. I want you to tell the story, but I'm going to introduce you first. Okay.
Oh, okay.
So yeah, Scott, this is Scott DeLuca from Kavinoky Cook, an attorney's office in Buffalo, New York. Local to us. You are actually coming to me from Lockport, New York, which is a sort of a second honorary home of mine, which is nice. So represent Lockport. Scott, why don't you, you're going to introduce yourself a lot better than I will. So just talk about who you are and what we're going to talk about today.
Well, sure. Thank you very much. I am Scott DeLuca. I have been practicing labor and employment law in Western New York now for about 23 years. I am originally from Western New York. I went away for college and law school, but in the late 90s, when it wasn't quite popular yet, I came back. So I started the trend, I like to think.
Yeah.
I graduated from New York Law School in 1998. I was a member of the Moot Court Association. I was executive editor there. I was also a member of the Journal of International and Comparative Law. I've been practicing labor and employment law in Western New York and throughout the Northeast and other parts of the country as needed. I am admitted in the New York State courts, all four district courts in New York State, as well as the federal court for the western part of Pennsylvania. I'm also admitted to the Second Circuit Court of Appeals in New York City. And most recently, in 2017, I was admitted to the bar of the Supreme Court of the United States. And that is what you see right behind me here. This is the U.S. Supreme Court courtroom. And that was an incredible event for me. I was admitted live in person in the court in June of 2017. They let us in. We heard the announcement of several appeals decisions from the court. And then they recognized all the people who were being admitted. When your name is called, you stand up, and I made direct eye contact with Chief Justice Roberts, who was originally born in Buffalo. And that was a great experience, being in the courtroom and being admitted and sworn in and whatnot right there in open court. But what was even better still was right after that, we were ushered back to a conference room where we were having a luncheon for all the people who were admitted. And Justice Ruth Bader Ginsburg came by and chatted with us for about 20 minutes or so. And that was a great experience to be, within arm's length of Justice Ginsburg and hearing her talk. It was amazing.
I mean, that's like a once in a lifetime thing. It's so awesome.
Yeah.
I love that. When you told me that story, what's that?
It was actually my second chance of meeting her in my lifetime. I actually met her in 1998 when she'd just been on the court for about 4 or 5 years. We through when I was in law school, I had the chance, but this was amazing to be admitted that day and speak with her and whatnot. So truly outstanding experience.
That's fantastic. Okay. That's awesome.
So,
I love that story. I'm so glad I was like, I'm not letting you off the hook without telling that story to everybody. It's so great.
Well, my pleasure.
So today,
yes.
Today we wanted to have Scott on, obviously, as things are starting to, it seems like things are opening up. It seems like, this definitely, we've just had another relief package passed, and there's a bunch of new legislation in there, some updates to other stuff. So we wanted to have Scott come on and talk about some of the new, some of the new labor law impacts of the American Rescue Plan. So we're going to talk about a few things. Certainly the employee retention, the ERTC, or the employee retention tax credit. The stuff with the CARES Act. We're going to touch upon a lot of things. Vaccination leave, you name it. So
we have a busy agenda.
Busy agendas, yes.
So let's jump right to it.
I was just going to say, let's get into it.
Sure.
So thank you again for coming on. And so I'm going to ask the same question that probably a lot of people ask: is what is the employee retention tax credit, or the ERTC?
ERTC or ERC, some people take the T out. Right. It is a tax credit that is going to be available for certain employers with regard to some of the employment taxes that are normally required to be paid to the federal government. As you mentioned, Joe, it was originally passed as part of the CARES Act in March of 2020 when the pandemic first started. Then it was expanded and the duration was lengthened in December of 2020 with the Consolidated Appropriations Act that was signed by then President Trump. And then it was expanded again by the American Rescue Plan Act of 2021, which was just signed by President Biden a few weeks ago. So with these various amendments, what I can tell you for certain at this moment is that people can have the tax credit for wages that were paid, certain wages of certain employers that were paid from March 12th of last year through the end of last year. And then there is additional tax credits and a greater tax credit that's available now for the entirety of 2021. But the amounts and who qualifies are different for 2020 and 2021. Today, I want to focus on 2020 because that's the part that's passed. It's historic at this point now. And those are things that you want to make sure that you file the right forms to get that tax credit before it expires or before you can't apply for the tax credit anymore. I will say that with the passage of the American Rescue Plan Act and the signing of that by President Biden on March 11th, the IRS has not come out with final guidance for that for all of 2021 yet. So we can answer some questions about that, but for the second half of 2021, there's a lot of unknown questions that are still out there about the ERC.
Yep.
So with that, I guess we could just turn to who's eligible for it.
That's my next, yeah.
Okay. So it's going to apply to employers that are in the private sector. So government, public sector employers are not, don't qualify for it. But there were changes, and now it's also applicable for not-for-profit organizations. So private sector employers and not-for-profit organizations are eligible for it. A quick note, if you're part of a larger organization, so you're a corporation that's owned by another corporation, there are aggregation rules that apply. And what that means is that the IRS is going to look at the whole organization to determine who gets the tax credit. So you need to be careful if you are a corporation that's owned by another corporation or a larger entity. You may be aggregated with the larger entity, and it may be the entire group or aggregation group that's going to be applicable or eligible for the tax credit.
So what would that mean for them then? They would get, they would likely get a smaller credit, or?
What it's going to mean is that the employer that may get it might be the corporate overlord, if I can put it that way, the owning corporation, or it may limit the amount that's available to each of the member corporations of the organization. So if you're part of a structure like that, where you're part of an aggregation group, you're definitely going to want to work with your counsel and your accountant to make sure that you're getting all of the coverage that you need, so that it's divvied up appropriately amongst all the entities. It's a pretty complex analysis, and we certainly don't have time to do it today. And it's so intricate. You definitely need to work with counsel and an accountant to make sure that you're properly looking at that.
Gotcha. Okay. All right. So I think we detoured for a second, but what we were talking about, we derailed for a second to talk about the aggregation thing, right?
Yes.
Okay. Before that, you were talking about who's eligible.
You
Yeah.
want to go to that question?
Sure. Yeah.
Okay. So the question of who is an eligible employer. And there are two ways that you can qualify for the ERC. First is that you're a trade or business that was fully or partially suspended or had to reduce business hours due to a government order. And there were lots of those that were in effect last year in particular, certainly in New York State. And there are still some that are in effect in New York State right now. So if you were out of business for part of a period of time, part of a quarter, you can get the tax credit for that part of the quarter. If you are out of business for the entirety of the quarter, you can get it for the entirety of the quarter. So it's going to depend on whether or not you were a trade or business that was fully or partially suspended. Another way you can qualify, or the second way, is whether you had a significant decline in gross receipts during the relevant quarter. So during 2020, and for purposes of the CARES Act, the question is whether the gross receipts in a calendar quarter were 50% less than the gross receipts of the same quarter in 2019. So for example, in Q2 of 2019, if you've had $500,000 worth of gross receipts, if you had $250,000 or less in 2020, you would qualify under that rule. And then you would have to look at each calendar quarter along the way to determine if you're eligible. So the first question is aggregation. Once you've got the aggregation question, then you determine eligibility. And it's whether you were suspended or stopped from operating, or you had a qualifying decline in gross receipts. There's going to be different rules through June of this year because of the change with the new law. And I don't want to get into that yet because the IRS is still publishing those rules. So be on the lookout for new rules from the IRS to determine if you qualify for purposes of the Consolidated Appropriations Act of 2021 and the American Rescue Plan, which will affect after July 1st and later of this year.
Okay, cool. That'll give us an excuse to talk again, I think.
Outstanding.
So, all right. So what benefits are available for employers in 2020? And then will they be different for 2021?
So for qualifying employers, even if you received a PPP loan in 2020, the credit is for 50% of qualified wages that were paid between March 13th of last year and December 31st of last year, up to a maximum annual credit of $10,000 per employee. So what does that mean? It really means up to a $5,000 tax credit per employee. And I just read you the way that the legislation is written and the way the IRS writes it. So the bottom line is that you can get up to $5,000 tax credit per employee for qualifying quarters. Sorry, not for qualifying quarters, for the entire period between March 13th and December 31st of 2020. What changed is that in 2021, it's per quarter. So the tax credit is going to be a lot better in 2021 if you qualify. And they probably made it more attractive because they're hoping that fewer employers probably qualify for it now, because not as many people are out of business or suspended because of the pandemic, or have had the gross receipts fall off that they had previously. In 2021, you can get up to $7,000 tax credit per employee per quarter.
Wow.
So it's up to a $28,000 tax credit per employee in 2021.
So it was 5 last year.
Yes.
Okay. Wow.
And now it's 28,000. Yes. But remember, you have to qualify. You have to be an eligible employer for each quarter.
Okay. So
say you were only eligible, and I'm sorry to cut you off, Joe. Say you were only eligible for the first quarter of 2021, then you could get up to a $7,000 tax credit per employee.
Okay.
But if you qualify for the first 2 quarters, then you could get up to $14,000 per employee.
Okay.
Keep going from there.
Is it possible to qualify? And this is, I mean, I'm asking you all these questions as a doe-eyed somebody who's nowhere near this stuff. I mean, like I work, obviously like I work for a payroll company, but I'm the marketing guy. So I'm curious about this stuff. So would it be possible for someone to qualify for like Q1, not in Q2, and then again in Q3 and so on?
It is possible. I recall that there is a rule that if you have an 80% fall off in business, there's some 80% rule that's in there, and it may only qualify for the second half of 2021.
Okay.
But I think the answer to your question is you could. So you could qualify for Q2 and 4 of 2020,
right,
and then 1 and 3 of 2021. But watch out, and specifically for 2021, about this 80% rule.
Okay.
That there may be a gross receipts reduction piece that involves 80%.
Okay. Yeah. So you've talked a few times about qualifying wages. What are qualifying wages?
Sure. So qualifying wages generally, specifically for the period between March 12th of last year and the end of last year,
okay,
is going to be wages that are subject to FICA taxes. And that's going to be anybody who is a W-2 employee and they're making less than the Social Security threshold, which is now somewhere in the $130,000 range. So if they're making less than, and there is a $100,000 threshold for the tax credit to begin with, for compensation. So if it's compensation that's subject to FICA taxes up to $100,000, that is going to be a qualifying wage. Health expenses that an employer pays on a that an employer or an employee on a pre-tax basis pays can also be qualified as wages for purposes of this tax credit. So it's not just the W-2 wages that are subject to the FICA tax. It can also be qualifying healthcare expenses.
Okay.
But I mentioned earlier that people can get the tax credit and have received a PPP loan. You can't double dip. So if you're using qualifying wages for purposes of why you got a PPP loan, you can't use those qualifying wages for purposes of the tax credit too. You can't do both.
Got it.
So qualifying wages under the PPP do not count for the ERC. Okay.
Why is the number of employees important?
The number of employees that an employer has, and this goes back to the aggregation group that we started talking about at the beginning.
Yeah.
Under the CARES Act, so for purposes of March 12th to the end of 2020, the ERC applies to employers. Sorry, let me say that again. Under the CARES Act, an employer with more than 100 full-time employees can only use the qualified wages of employees who are not providing services because of the suspension of business.
Okay.
So if if you're paying employees and they're doing work, those can't be used. But if you're paying employees and they're not providing services because you're continuing their wages, those can qualify. Okay. So if it's 100 or fewer employees under the CARES Act, you can use all wages that are paid the whole time. So just let me review that real fast.
Yeah, thank you.
If you have 100 or fewer employees, all wages qualify for the ERC. Yeah. If you have 100 or more, there's a limitation on wages that are being paid to people who are not providing services. Those are the only ones that can qualify for the ERC. What changed under the law that was signed by President Trump at the end of 2020, and then which was expanded by the American Rescue Plan by President Biden in March of this year, is that threshold changed to 500 employees.
Oh, okay.
If you have more than 500 employees, then you have that limitation. If it's less than 500 employees, it's all wages that are paid. And that is now for the entirety of 2021.
Wow. Okay. So in the beginning, it was a bit more beneficial for like smaller businesses.
Very much so.
Okay.
Very much so. But now it's going to cover a much wider swath of employers across the country.
Got it. Talk about, I mean, there's obviously a possibility for some double dipping. Can you talk about like if there's any protections in place to prevent that sort of thing, or?
The protections that are in place for that are going to be questions that are going to be raised about forgiveness of your PPP loan,
okay,
or a review of your Form 941. So if you claim a tax credit for employees on your 941, and there's cross-referencing that's done by the IRS or the Small Business Administration on the PPP side, you could be facing problems, and your PPP may not be forgiven, or you could face tax penalties on the 941 side. Gotcha. So you got to be careful to not use wages on both of those rules. Now, that's not to say that you can't use wages that are paid during a non-qualifying period. So if you don't qualify for the ERC, say during Q2 of 2021, those might qualify if you get a PPP 2.0 loan, as I call them, the second round of PPP loans. That could qualify. So if you're not taking the ERC, then you would be able to use that against your PPP, but you can't do both.
Okay.
I know it's crazy, and that's why I'm gainfully employed. I guess.
I was just gonna say, this is why someone needs someone like you. And I will absolutely make sure we put like contact information for you, because I'm sure a lot of people are feeling the same way I am right now. Like, what in the?
What did he just say?
Right, exactly. So I guess that. So like, how? So then, what does somebody do? Like, how do you get this? Like, how do you? If you think that you qualify, like, what would be the next steps for an employer of any size that thinks they qualify for?
It's going to be dependent on the filing of your IRS Form 941.
Okay.
So that's where you're reporting the taxes that are withheld from paychecks, from your employees' paychecks, and that's going to show the payments that are due to the federal government, and you would show the tax credit on the 941 form. If you already filed your 941 form, but you realize, hey, I'm entitled to this tax credit, they've created the handy dandy IRS Form 941X, and you can file that to get a credit, and this is a refundable tax credit. So what does that mean? It means that is cash back in your pocket as an employer. So if you overpaid the taxes that are due to the IRS on your 941, you file, whether it's a 941 or a 941X, that is money that'll come back to you as the employer for you to hold on to and use to operate your business.
Okay, great. Okay. So I'm trying to think where do people find guidance for this type like stuff? Do you guys publish stuff on your page, or is the IRS pretty communicative about how this all works?
Yeah, the IRS has been communicative, and they've provided some pretty solid guidance. It is pretty thick and detailed, which you would expect. And so my efforts to advise my clients have been direct communications with them. We don't publish a lot of this type of stuff on my firm's website, but I do a lot of it directly with my clients through direct communication with them. And then when employers come to me and say, hey, can we get this? Then we conduct the appropriate analysis to determine whether or not they qualify, and if so, how much. And then there's also clearly in this case going to be involvement with an accountant or whomever your 941 preparer may be.
Gotcha. Okay. All right. So that, I mean, obviously, like, I think we've covered everything that we wanted to talk about in terms of the ERC.
I think so too.
We'll put all this stuff like in descriptions and blog posts and stuff like that. How do people get a hold of you? And who should get a hold of you, I guess?
Well, if you're an employer in the state of New York and you're uncertain about the ERC or any of the other topics that hit on the labor and employment realm, that's when you would contact me. And I'm reachable at Kavinoky Cook, which is a law firm located in Larkinville in downtown Buffalo, even though I'm up here in lovely Lockport. And you can reach me through my email address, which Joe will make sure to publish, as well as my cell phone number. And I make that number readily available to all of my contacts and clients. That is the way to get a hold of me right now. And Joe will also put that up. And you should definitely feel free to reach out to me. I'm pretty good about trying to get back to people within 24 hours. So I do a lot of litigation, so sometimes I get laser focused on that, but that's client service and that's what's required. But if you contact me with your questions, we'll do our best to make sure that we get back to you in a timely manner to make sure that your questions are answered and that you're not missing any deadlines for filings.
That's awesome. Okay. Yeah, I will be sure to include all that stuff. Scott, thank you so much. This was, I mean, even I was able to latch onto some of this. So, such a great resource. And I really, really appreciate you taking the time to sort of sift this out and make it digestible for people. Cause it's legalese, man. The people didn't, like I always say, people didn't get into, they want to make pizza. They want to like sell clothes or whatever. They don't want to like deal with all this stuff. And having some like a resource like yourself is such, I think people are going to get a lot of benefit from it. So I really, really appreciate your time.
Well, it's my pleasure and I'm glad to help. And I look forward to helping any of the complete payroll clients that are out there and helping them navigate these choppy waters.
Awesome. Thank you so much, Scott. Have a great day.
Thank you.
All right. So that was Scott DeLuca, again, from the Kavinoky Cook law firm, discussing the employee retention credit. Very helpful with this. Obviously, it's dense information, and Scott does a great job of making it at least somewhat understandable. But absolutely, as he said, please feel free to reach out to him if you or your organization has any questions about this, or if you need some guidance in taking advantage of this tax credit. So his information you'll see wherever you're watching this. If you have any questions for Scott, if you have any questions for us, if you would like to suggest a topic for a future episode, or if you'd like to volunteer yourself to be a guest on a future episode, please drop us a line. We have an email address, peoplework@completepayroll.com. You'll see it here. Feel free to reach out. We would love to hear from you, even if you just want to leave some feedback. Anything helps. But in the meantime, thank you again so much for watching. If you're able to, please subscribe. We're constantly publishing content like this, so we really appreciate that. But either way, thank you so much for your time. And as always, welcome to Payroll Country.